Currently at a $568 billion market cap, $181.32 a share. Year to date, Tesla's down about 30%. Today we'll look at some of the financials and talk about some of the new growth drivers that Tesla has planned. Is Tesla undervalued at this price? Let's go ahead and start. One of the main reasons causing the stock price to drop is the slowdown in growth. Tesla specifically indicated that vehicle volume growth may be notably lower than last year as it works on the launch of the new vehicle. Here we are on Seeking Alpha. We're going to go ahead and go to financials, and I always like to start with quarterly data to see how they're doing most recently. Again, I'm just going to take all these numbers and I'm going to export it out into my Excel spreadsheet. A couple things we'll look at: earnings per share, total revenue, cash flow per share, cash flow from operations, and net income. Again, this is quarterly data. So looking ahead with total revenue, as you can see, they have 8 consecutive quarters of growth, and with the latest report, they are only up 8% compared to the previous quarter, September of 2022. And also when we take a look at earnings per share, we could see that they did drop down 44% compared to the previous quarter. So the past 3 months, there has been a huge slowdown in growth compared to their huge growth rates that they were having in 2022. So one of the things I like to look for is consistency in the numbers that are posted by these companies. And as we look at cash flow per share, cash flow from operations, and net income, we can see it's not too consistent. And you sort of want to dig deeper on why it's like that. And one of the main reasons Tesla is pretty inconsistent because they do continue to focus on future growth projects. We'll go ahead and take a look at the cash flow sheet right here. And as you can see, they have consistent cash flow from operations, great year-over-year growth, capital expenditures, what they put back into the business for investments. So with capital expenditures and R&D expenses, both reaching company records in 2023. So they are reinvesting a lot of their money back into the business for future growth projects. So this is from the latest quarterly report that they just posted. I do want to emphasize that there will be enormous challenges in reaching volume production with the Cybertruck, and then in making the Cybertruck cash flow positive. So when we go back to some of the cash flow per share and cash flow from operations, this explains why a lot of these numbers posted aren't going to be consistent. They're going to be kind of all over the place because this is simply normal for when you have a new product with new technology or any new vehicle. But especially one that is different and advanced as the Cybertruck. You will have a lot of problems when you're trying to scale things. So pretty much buying Tesla at this price today pretty much is what you would pay for it 3 years ago, before the little run up we had here in 2022. If we take a look at what Elon Musk said during the transcript, they do talk about how all these new products are great products, but financially it will take a year to 18 months before it is a significant positive cash flow contributor. So a lot of this will affect some of the cash flow from operations, cash flow per share. They do talk about how the demand is there, but I think in the short run of things, it will affect the stock price. If we take a look at how much cash Tesla is holding, they have around $16 billion in cash with only $2 billion in debt. So I guess we'll just have to see how the demand holds itself. Anyways, what do you guys think? Do you think at this price, Tesla is undervalued and a good buy? Let me know your thoughts.